Welcome to MFAA on Air.
In the lead up to the 2013 federal election, the mortgage industry and small business faced underlying uncertainty and possible change. Cynthia Grisbrook, MFAA Vice President and Principal of DLV Finance Solutions, recently spoke to MFAA on Air about how she dealt with the uncertainty for her own business and her clients, and how the situation has panned out since.
I think the uncertainty was that it did quieten down. People weren't prepared to actually take that next step, whether to purchase or to take out some business lending. They wanted to see what was going to happen, how any change of government was going to impact them both personally and professionally. It's really important when clients are uncertain that you make them feel exceptionally comfortable about what their decision is, whether it is to proceed or to sit back and wait, and just to be there when they need an ear to have a chat to about the situation. Is their situation changing? Has the change in government actually impacted their business? Do they need to start laying off staff? So if they do that, can they start to expand? Do they need to actually put on staff? How's it all impacted? Sometimes they just need somebody who's not within their business just to listen to what they're going through. With hindsight, I think I'd probably spend more time on my CRM, keeping it up to date. Like we all, put it in our diary, make sure that you maintain your CRM, make sure that you've contacted your clients. But again, I think we can all get better at doing that. Having that updated, accurate, it just makes your life a lot easier when things do start to move again at a pace that you may not have been used to over a quieter period.
Cynthia also discussed current uncertainties the industry is facing, including budget cuts to ASIC, APRA's assertion regarding third-party loans, and diversification.
It is an industry of uncertainties. I think probably the biggest uncertainty would be the APRA and the ASIC issues that are out there. People feel that because ASIC is having its budget cut that perhaps they're not going to be as strong, or it's not going to be providing the consumers the confidence that it's appeared to have previously. However, we've been in this industry long before the NCCP and before ASIC, so really the consumer confidence probably won't be impacted. The issue with APRA and the implication that loans written by credit advisors are risky has been addressed by the MFAA, and that's what our MFAA is there to do, is to take these issues on for brokers. I don't think there's any substance to the fact that loans written by credit advisors are risky. There will be elements of the industry that will leverage on that, but I think overall, once the result comes out, I think it'll be quite positive. Diversification is always an issue out there because I think a lot of people don't actually understand what it means. Diversity could be just diversity of thought. If you want to diversify your business, your systems, it all comes down to what business you're in. It's important that if you're going to go down a particular path that you actually have the appropriate training. Self-managed super fund lending is probably a prime example of that. If that's something that you want to focus on, then it's really important that you actually have the right training, not necessarily lender specific, but a broad training so you actually understand what your role in the self-managed super fund lending is. I think for credit advisors to get through any time of uncertainty is to actually know what business they're in, focus on what they want to do, where they want to be, and how they're going to get there. There's lots of different models in this industry. None of them are right, none of them are wrong. It's what model suits you as the individual credit advisor or the company, but just work out where you want to be.
To find out more and register for the MFAA's SMSF lending program, visit www.mfaa.com.au.
You've been watching MFAA on Air.